Hey guys,
how you doing? Yeah, thank you. Daniel's going to be the co-host this week.
See you guys.
He wants to do that. I know he does.
hey guys.
Speaking of Daniel, he has this Korean monster he wants to share with us. Please stay seated, Daniel. What you got there?
There at all.
It's my Korean monster.
Yours
Aussie
is blue.
lemonade style.
Good to know.
It's all in Korean, so I have no idea if it's even a real monster. But these podcasts
monster?
are fueled by energy drinks, and I don't know if
Yeah,
you guys
they
saw
are.
it.
Yeah,
they are.
Zero Hedge had an article the other day. It was funny because I had it up on my computer still, and there was a Goldman analyst that was telling customers to buy nicotine, energy drinks, and candy stocks because they've been underappreciated in 2025, and as things rotate out of tech, the consumer backdrop is looking strong. Apparently, allegedly,
yeah.
Nice. We're doing content already. We're getting to information and educational and all that good stuff.
It's all about Zins and Celsius, baby.
That's right. All right, so let's go ahead and get started here. I'm Darin with Arbitrage Trade. This is After the Bell, and my guests are Daniel Hopwood in the bottom. He's normally where Royce is, but Royce is chasing money again, which is great. We encourage that all the time. And then in the top right, all the way in from Florida, he came all the way to Memphis just to share this with us. It's the first time I've actually met him in person. That's crazy. You've seen all of these shows, and I've never met him in person. And I've never met Daniel in person. Now he's the only person.
Is he cuter on camera or in person?
Oh, much cuter. Yeah, especially with this little haircut.
This lighting, though, it has to be in person.
Yeah. He's got a nice haircut, and he's got his pajama top on, hoodie. It just looks like one.
I'm not going to talk bad about Carolyn's lighting.
That's right.
Carolyn's movies her office.
Well, I can't ever get her on camera. We do the weekend news, and she's always the one with the blog, but I can't ever get her on camera. So let's get the disclosure out of the way. We're not financial advisors, and this is not financial advice. This information provided is surely for educational and entertainment purposes only. Please always consult an investment professional before making any financial decisions. So let me run here with the numbers. Since we know that Daniel and his monster are in other countries. So let me update that real quick. It didn't sound right.
Well, now these are 2 days old.
That's true. So now definitely, and we're looking behind me, you see all the red. So that means that everything was down today. And Dow Jones was, went up. Am I wrong?
Yeah.
I'm wrong.
Mm-hmm.
That's because I wanted Christmas to be behind me. That's what it is. Red Christmas. Here we go. Dow Jones. How about that for on the fly? Dow Jones plus 65 or 0.14. S&P 500 is plus 53 or 0.79. NASDAQ is plus 313. It was the big winner. Plus 1.38. We have WTI crude that is way down under 56. We have gold at 43.63. We have silver way up to 65.45, and it was higher. We have to an all-time high. We have the 10-year at 4.12. The dollar still below 100 at 98.11. Bitcoin has been having fun dropping down at 85.62 and dropping. We have Ethereum at 28.33 and XRP still under 2 at 1.82. All right, I'm sure it's different than when I looked at it before. Is it still moving down? I assume it is. Even though, and we just had the Genius Act Part 1 kind of go through with stable coins. Anyway, we'll get to that a little bit later. Let's talk about, we got payroll here. Jobs are not in. They're never in because they're never right when they do come in anyway, right? And we could talk about the BLS also. They just released another report today for inflation. And it's like, okay, should we actually think that's correct or not? Or is it just trying to get the Fed to push another 0.25? I think that's what it is. But anyway, start us off there, Daniel. What you got?
Yeah, so payroll rose by 64K in November, which was slightly above expectations. But total unemployment climbed to 4.6%, which is the highest since 2021, which comparing it to 2021, that number is when things were on the mend back down. So it's kind of like maybe not the most fair comparison. But the point being is that, we talked about this months ago, is that when unemployment starts to creep up in a slightly more exponential manner, especially above its 50 moving average, if you want to overlay it on a chart, it's typically starts to increase. And normally it's about the 5% level where you traditionally would call it a recession indicator, right? And with jobs, it's when unemployment's already there, it's a bit too late. Cutting rates isn't immediately going to affect the jobs that are people are losing. And I think it's important to note that 70% of those new jobs were in healthcare, which is really just taking care of old people. So at least those new jobs are resilient because as long as a mass amount of old people don't die, those people are going to continue to have jobs. And one of the maybe more concerning parts was that when you kind of broke down the numbers, is that there's still a decrease in headcount of businesses in the US with under 50 employees. And so those companies are, firing people and not bringing them back. And the seasonal workers that you typically see from UPS, FedEx, Amazon, retail outlets didn't quite increase the way they normally do this year. So there's a lot of kind of not alarming signals, but kind of concerning of this is actually, if you want to look at the K-shaped economy, as we always talk about, the low level stuff is it's not getting decimated, but it's slowly painting kind of an uglier picture. Now, the one counter to this that I saw was that, this is a rise in unemployment because of a one-time drop in government employment. And I looked into this, and it's that one-time drop in government unemployment would be such a small number that it wouldn't really, be a big blip on unemployment. Also, the government shut down. Should we really report those jobs? Presumably they're going to come back, and if they don't, the government continues to be shut down. We have bigger issues.
They'll use them next year as increases.
Yeah, right.
To pump up the market.
Well, I mean, you kind of I guess you in your question you posed about is this kind of a fluke, or is this an actual something that's going to be a continuation? And I'll kind of piggyback off what Darin was saying earlier. How do we even, he talked about the CPI coming in, and all of a sudden it's magically cooler than normal when the government was shut down and we don't have official numbers. So they just kind of, and it's scary when you get all of these economists that are now agreeing with Darin that maybe these numbers that we're getting aren't exactly factual, and they're just somehow getting materialized and pulled out of thin air. And so, because if you go tune into any station that any financial station that you listen to, they're all saying the same thing, that these numbers kind of seem a little bit funny. They may not have directly said that they're just fabricating them, but everyone said that there's something iffy about these numbers that came out. And what I'm thinking is that, again, going back to the jobs thing, every year or every month we keep getting these revisions, over revision, and the numbers came in hot last month, but then they revised it back to a minus 100,000 jobs back in October, that they kind of came in, oh, there he is. What's the fallout going to be next month when we get all of these revised numbers again, and we realize that, oh yeah, all of these numbers that we were given weren't actually factual, and then the CPI wasn't actually as cool as we thought, and the market's already pricing a lot of this in, and then are we going to get the blow up middle of January next year when all of these numbers are revised?
Yep. All right, we have that strange voice in the background with no pictures. Are you actually here? You know what? If I could do a mid-show switch here and pull him in. We're on the 3 screen. You know what? You'll be like Bob, actually with we can hear you, but I don't know if I can hear you through. Let me see. Say something, Royce. Try again.
Do you want to pause it and rearrange, or?
Let's see.
You
mean to do a splice?
Yeah, just edit it.
Do a splice.
Bring him in.
All right, we can actually do it this way. All right, guys, we're about to make we're going to actually get Royce in here, which means it's going to be this is the first time ever too that we're going to do this, which is go from a 3 format to a 4. And I apologize in advance if anything goes crazy. So we'll see you in just a minute. Did you bring the button, the Christmas button, Royce? Yeah, while we're rearranging, you could do that. All right. We'll be back in just a minute with some music.
You just want to magically transition.
All right, guys. Hey, we're back through the magic of whatever it is I performed. We now have the 4 squares, and Royce has jumped it. Can you put it closer to the actual microphone? The elf has brought in the music.
It's only 30 seconds, so enjoy it.
Instead of the green hat, he's got the black hat as an elf. Arbitrage
that'd be a perfect gift for my niece because it would annoy the hell out of the parents.
That's right. All right, guys, we already started, but Royce was chasing money. Now he's getting an actual rest for now. And the 4 elves are back. We won't have a chart to go with or anything like that, but at least we've got all 4 of us here to do the last one of the year, since we have Christmas coming up and New Year's. And so this is the last one for 2025. So I'm glad that Royce was able to join us.
On Christmas Eve, I want you all here.
He is now Scrooge. He's no longer an elf. He's Scrooge now. Thank you.
That'd be Christmas Day. Christmas Day for Daniel.
How would you like to enjoy it on the unemployment line?
Right.
It's getting long.
No, I got it. It's like, yeah. So if you could come in on Christmas Eve, that'd be great.
Speaking of those revised numbers.
Yeah.
That's right.
Revised numbers.
Darren's, yeah.
Good. Gonna add 3 jobs to that.
Right. We're just gonna add to that jobs report for January.
That's right. That's right. All right, so let's get moving on. We've got I guess we're on to crypto now. It's time to talk about crypto. There's a lot going on with crypto. I said it in the opener that crypto now is going to get tied to stable coins. So all these people are rushing to go, oops, I may not have dollar for dollar. So I got to do something to make sure we do have dollar for dollar. All these little fake coins, etc. Now we got to make sure we are backed by $1 each time. Even though we've said we've been backed this whole time, maybe we're not now. So Royce, I know you want to jump in on this and go crazy.
I am definitely all in on this. So,
but we're not financial advisors. Neither is he. We already said it earlier. Go ahead.
I'm not a financial advisor, but I am an economist. And an economist, basically, if you want to stand up a new infrastructure, you have to have all of the key tenants. And currently, we have central banks and our centralized.
How many?
About 8 or 9 of them. About 8 or 9.
Okay.
Right? And so now let's go take a look at if we wanted to debase a central bank and basically go decentralized, how would you do that? One, you have to build in redundancies. And those redundancies, basically, okay, well, there's USDC. Why do we need USDT? Why do we need Tether? Why do we need all of these other stable coins? Same reason. Each one becomes a redundant component of the other. Because if one fails, you still have another stable coin that's also backed by the dollar to back it up. So if there's ever a run on one of the stable coins, there's always 7 or 8 others that the others can run to make sure that they don't debase. Right? So you're actually creating decentralized central banks. Right? And so, and that basically that's layer 1. Layer 2 is then you have to basically say, okay, who among if they're going to be redundant for each other, you have to have rails. You have to make it where it's easy and quick. So if there is a run on the bank, we can basically recover quickly. That's where XRP comes in. It's the rails. So it means it costs literally 0.0001 XRP, or I think 10 drops, to basically do a transaction on the XRP or XLM network. So them being able to move quickly and swiftly between those stable coins, guess what you just created? An entire infrastructure to allow money across each one of the blockchains to move and move very, very efficiently. So no one sees it, but they are definitely setting up a new basis for decentralized currency, and cryptocurrency is here to stay.
Nice. Glad you came on board to talk about that. It's good timing. Daniel, you've got some more facts and figures you want to share about Josh's bank down there, Mr. JPM.
Yeah, so JP Morgan launched Money, that's money without an E, which is the first tokenized money market fund. And I thought this was interesting because part of the Genius Act was that, obviously it makes like stable coins kind of legal tenure, if you will. But banks weren't allowed to offer any yield on holding the stable coins in like a savings account. And, there's a bunch of political reasons why regional banks were worried about people wouldn't hold money with them anymore and whatnot. And, this is the big banks' workaround of how they can hold stable coins while still providing people yield. So this launches at, it's like $100 million size fund, really targeting ultra high net worth and institutions. So obviously going where the big money is. But, I look at this as like the precursor, obviously, of like kind of what Royce is saying of where everything is going. And, it is a little bit funny in my mind because crypto is supposed to be this whole anti-bank thing and like,
right.
Like outside of the system. But, now when you look at like Bitcoin and you look at the BlackRock ETF flows, all the outflows coincide pretty well with the big drawdown in Bitcoin. So, how the old cycles used to work probably aren't going to quite be the same. But it's obviously, if you were ever worried about crypto going away forever, now is no longer that time. It's clearly here to stay if JP Morgan is launching products like this.
There you go. And Josh, he already talked about Josh. He talked about the Josh Bank already. So you have anything else you want to say about crypto? Here to stay?
I don't know. I mean, I was going to hit on the fact that, that was kind of their big thing was that you get no return on the stable coins, zero yield. And so, but you move it over to money. And now it's like a stable coin adjacent that this Genius Act has opened up this loophole. And so now you get like a 4 or 5% return, like a typical money market. So,
and here's something that not the average cat can do, but anyone in IT can do. There's nothing to prevent Arbitrage from launching their own coin and basing it against the US dollar either. And then basically anyone that does transactions or business with Arbitrage, now we're earning money on our own stable coin.
There you go. I wonder who can make that happen.
I don't know.
Okay. We'll find somebody.
Where did that idea come from? What?
Somebody in a skull cap can help us, I think. All right. So the next thing is, Daniel, you said the market doesn't like AI anymore, but I think just like the money being passed around internally with all of the AI guys, I think sometimes we like it, sometimes we don't, just depending on where the charts need to go. But go ahead and introduce this for us, Daniel.
Yeah, so reading the news this week, there was a lot of talk about, parts of the AI trade being down. So you look at Oracle, it's down 40% from September high. You look at another company like CoreWeave that, I forget how much they're down, probably at least 50% from their high. And the market is kind of starting to look at how does the CapEx that people or, these companies are putting into the build out of their infrastructure actually impact their returns. And when it came to the case of Oracle, so they're planning a $50 billion CapEx spend, which is up from $35 billion. And they had $18 billion of bond sale funding it, which is the largest ever in tech. And a lot of investors are starting to now worry about, how does OpenAI come into play when it actually comes to making good on their commitments? If you look at when Sam Altman had his little break down on that podcast. Everything that is publicly traded related to OpenAI is down 20%, and all the Google related TPU stocks are up like 20+%. And so I thought it was kind of like an interesting rotation of the public markets saying how they feel about the AI trade. And if you looked at our Substack this week, we talked about the rotation into the other 493 stocks. So if you look at the S&P equal weight, it's breaking out to an all-time high, where the regular market cap weighted S&P is barely holding the 50-day moving average. And Darin will like this one, the credit default swaps on Oracle debt. The spreads have been blowing out. So, that means that traders are quite worried about Oracle defaulting on the debt, which I think is, probably highly speculative. But, I think, in my personal opinion, there's a bit of a rotation underway into some of the unloved stocks. And I don't think that means that like there's an AI bubble that's like bursting or something. I think it's just like, that got a little overheated. Pharmaceutical stocks are ripping, healthcare stocks are doing really well, base metals and materials are doing really well. And I think that trade could continue for a while until we get, another big move in AI. And then you see that, kind of rip again.
Well, it's time for the data centers to get built. That's the problem, is just not enough. They can't deliver on what they're promising yet until the data centers get built. So those have to get built. I wish we knew somebody that could help with that too. Josh, you got anything about AI in general?
Well, I mean, I think what really, specifically to Oracle was the fact that they kind of, they pushed back on the expectations of actually having a potential for return in, 2026, 2027. Like they started pushing expectations back, like, hey, these things might not actually materialize. And so what's actually, they're not actually benefiting. And plus we've already got a little bit of a liquidity crunch with, we've talked about the carry trade unwinding a little bit. We've talked about that, the hawkish stance that that the Fed has now, and they're more of a wait and see. We don't really know if we're going to get the rate cut. So we're seeing a lot of this, and it kind of is also why Bitcoin's kind of dragging, is because there's a liquidity crunch. And so we have to have more liquidity to actually fund all of these AI data center build outs and the things that are, so when you get this liquidity crunch, people start looking at, when am I going to get my return? Because then they have, they need that return to inject into other things. And so then they start looking at what's actually going to get me a quicker return, like who's actually benefiting from all of these AI things. And it's not right now, it's not all the data center build outs and everything like that. It's all the smaller companies, like, Daniel was just talking about what they're calling the impressive 493 now. It's all the ones that can realistically benefit from AI and get, leaner and faster and more efficient. And so you're kind of seeing a rotation into those stocks, which is what really seems to be propping, it was the Mag 7. Now that's the 493 is kind of what's propping up the S&P. And the return is now, the expectations for the ROI is now pushed back several years further than what they originally had expected, or what was originally promised with, when we were doing the whole circular funding of AI and all that. And then, if there's no more circular funding, then people start looking at, where am I going to get my return? And I think that's why we're kind of seeing all of these various things. And, the media is blaming it on 101 different things, but I really think it's just because we're seeing this, large liquidity crunch in these major players. And so you're just kind of seeing that rotation out.
Yeah, CNBC actually admitted it this morning, and even Kramer went off on a diatribe about it, but he talked about back in his day, this was illegal, is to do the circular. Say almost a quid pro quo, that I'm going to give you this amount of money if you buy this back from me. And he said that back then it was a no-no, even though they did it. And now they're doing it again. So it's like, And if you do it within this environment, with this president, He don't care. He's got all his people coming in, and that's his job, is to make everything go crazy and up and to the right too. So that's what he's going to do. He's going to allow, and as I like to say when I'm on Facebook and people ask if I can be tagged to a picture, I'll allow it, and that's what he's doing. He's allowing it.
It's the most boomer thing I've ever heard you say is that you go on Facebook. Jesus.
Don't call me a boomer. All right. Speaking of that, go ahead.
One take on that.
Yes.
So while everyone, so the hardest part about being a communist, the hardest part about basically playing with the math and stuff, everything is lagging.
I thought he said communist, but go ahead.
I thought Royce just said the hardest part about being a communist. I was like,
communist, I am not a communist. I know. An economist. Right?
Where is this going?
Right? No, the hardest part about basically everything lags, right? So everyone's talking about data centers. Everyone's talking about, AI, but they're not looking at the things that go to build a data center. Data center takes like 12 to 18 months to plan out. That's blueprint wise. That's engineering, design, etc. wise, right? I think where we're going to see the biggest boom, and that's why I keep calling this an industrial revolution as opposed to anything else. Watch out for the companies like Caterpillar. You're going to have the people who are actually building those data centers. That's where you're going to see the boom happen first, because guess what? It's winter. They're not Caterpillar. If you look at their charts, almost everyone, they pull back. Why? Because they're not mobilized. They're tucked in for the winter, but as soon as spring, early February, March hits, they're mobilizing to actually do the work. So you're going to see that happen first. Then you're going to see those anchor tenants that are basically saying, you know what, we want to lease that space. They're going to ramp up and start delivering service to those locations. And then basically we're going to see AI flourish again. But look for the tail first before you look for it's going to take 3 to 5 years before they're at full capacity. So why are we looking for the market to be going up now? We got a ways to go.
Yep, absolutely. And people don't understand how much you do know that. Let's move on to. Yes, that's right. That's right. I know nothing, but I know everything. Here's the next thing is we have a Schedule 3 drug being moved down to Schedule 1. So I actually did this in my 3 things today that will be out tomorrow. And so it's funny that it's part of this as well. But Trump is passing an executive order that is making marijuana now going to be a Schedule, like this back as it's flipped, a Schedule 1 instead of a Schedule 3, because Schedule 3 is up there with like LSD and heroin, which is where it was. And now it's a Schedule 1, which is like horse tranquilizers and steroids. It's in that part.
Oh, wait.
That's right. So, and some states have already done this. They've already moved to that, but it was never federal. So now it's federal. And so it's still not recreational as a country, which I think it should be. It's considered a one, so it's still quote illegal. But I mean, it could mean that maybe there's more passive authority for it now. We'll have to see. Daniel, what else you got? You brought a couple other things to that.
Yeah, well, so this I didn't know about this until I looked into it. But so, as you know, obviously weed's been federally illegal. And so part of the reason that makes it really hard for these companies to operate is that they can't really use normal banks. Everything has to be done in cash. There's this component of where they don't have proper payroll, and the way they have to file taxes isn't the same as a regular company. And it completely kills their margins because they can't write anything off on the business. And so that's why, I forget when a lot of these stocks IPO'd. But if you look at them, they're down, 99%. And with this going from them being the equivalent of heroin to Tylenol, they're now able to have actual, real tax filings, and they're now going to more or less be a real business where they stand a chance to have true operating margins and profit. Now, in my opinion, because I do think this is interesting for Trump to do, because like, I don't know if you guys know, but like he's super like anti-drugs and alcohol because he had like a brother that, I don't know, died or
Yeah, he doesn't drink.
offed himself or something from it. So he's like really not into it. And so I just think this is like a big federal tax play for him to help try to like reduce the deficit as much as he can. And I don't know if you guys know this, but like in California, like weed is taxed. It's like crazy. It's like 25%. So like nobody actually like buys weed from the dispensaries. Like it's
Right.
all like done illegally because you get it cheaper and it's like the same exact stuff. So, you know, while I think this is interesting and like good, if it is a tax play, like I think it is, I think that like this kind of goes like more or less nowhere because it's like anyone who's already buying it is not going to pay, you know, the state tax and then now the federal tax on it to like have the same stuff from like Joe down the street.
Well, from my perspective, I think the reason that it would still actually succeed is that now it can be put into banks, and banks need the cash infusion. They need the liquidity. If you have a liquidity problem, you now have a whole bunch of money that's sitting on the sidelines that you can actually put back to work and use fractional banking to basically boost the economy again.
Also, don't forget it's a play for votes because
that was
yeah.
about to be, yeah, that's what I was about to say is like,
Right.
And it's an election year. Yeah,
his ratings are at an all-time low. I mean, even with everything that's going on, I mean, it still haven't released the Epstein files. Like he's still the outlook about what his, you know, how he has affected the economy. Like even his own people are starting to turn on him. But now this is something that he can throw out there that most people really aren't going to care about it, and the ones that are going to care about it are the ones that probably aren't looking at him in a very good light anyway. So then you just, you know, move the needle a little bit into his favor, and then all of a sudden, you know, now if he's at like a 35% popularity versus like 30% popularity, you know, that's a pretty significant number, and then you get the tax revenue to boot.
And you get a news article that my approval rating went up by 10%, almost 20% in a single month.
Right.
It's beautiful. It's beautiful. By the way, it's good for Canada too, because they're the ones that are all the marijuana plays are up in Canada. And I know you mentioned Tilray. It's going to change the Canadian economy as well.
Y'all know entirely too much about marijuana. I'm questioning everything.
Only because it got shorted to hell and back. Back when everything else was getting shorted, all the meme stocks, there were a couple of weed plays that everybody shorted the hell and back. And maybe those shorts are still out there, and now we're going to get a complete reversal. And like you said, Tilray is starting to show some life.
Say, Royce, if you look at the Tilray chart, what is it looking like to you?
What's the symbol? What's the symbol?
TLRY.
We don't have that pumped in yet, but
all right.
But it's even more interesting.
No, it's actually about to begin a rally.
Mm-hmm.
Yep.
Wow. Yeah.
There's and you know
you're
what?
Welcome. Don't say never told you nothing.
But a rally for weed, stock market that is. But a rally for weed could really go parabolic because of all the way it's been shorted so much. And you're talking about swaps. I mean,
you know what? I'm putting at least yeah. Okay. I'm putting a little bit on this.
Yep. But again,
because
I should because I got high.
Well, don't forget.
I was gonna buy some Tilray until I got high. No.
Like literally the first, based on the charts, first point of resistance is like at $54.
What's it at right now?
12.
Oh wow.
Oh.
Yeah, that's how much it's been shot down. But,
hence my going. You know what? I might stop buying XRP for just a minute.
I think it's very important that I inject here. Again, we're not financial advisors. All right, so let's move on. Or we are also not weed.
It's just a fun looking chart, you know.
It's a fun looking chart. Like, you want to ride on a roller coaster? Yes, sir, I do.
All right, so to sum it up, and the way he put it is weed is cool again. I guess it was cool in 2021 when they were threatening that they were going to make it illegal, legal that is, not illegal. And so we get those every time the stock market needs a jump in that specific area. Then some person is elected to go out there and say it, and as a politician, and then now it's the president. So we'll have to see where that goes.
Been riots if they made marijuana illegal while we were all on lockdown. I think there honestly would have been.
Everyone would have been in the streets again,
right?
So they were locked down but high up. Is that what you're saying?
Yeah.
All right. Yeah, I had to do that part. That was too easy, I know. All right, so here we go. We're at the year end. Let's do the market predictions for next year. Just everybody can just kind of say what's going to happen. Are you going to? This is like a half year or full year by like next year? Like they do those price targets. It's always for the whole year, and it doesn't happen until like the last month of the year. But what are we doing here, Daniel?
Well, no. Okay, the point wasn't to have like a market price prediction. It was like something. I mean, if you have one, that can be yours. But the idea was to be like some kind of theme or market play that could be like happen next year, right? So I'll give an example. My idea is that the debasement trade continues, and you see kind of like a commodity super cycle. So you're going to continue to see the base metals play out. You're going to see some of these like agricultural and like refinery plays continue. I have two in my portfolio that I'm currently playing, which is like a chemical specialty and a industrial processor. And I think the companies that make real goods, kind of like going away from the AI trade, are going to have a good year next year.
There you go. I mean, do you want to get specific to like what is the S&P 500 going to be, or because that's what they love to do on CNBC.
Talk to the eight.
As you say, I have no idea. I mean, I hope it's up and to the right, but I personally, the market stands to have a better chance of like having a choppy year next year. And that's not to be said that it can't be up at the end of the year, but like, are we going to have another like 20% year that's just kind of like a straight line? Like, I feel like no. I mean, if you look at the market even right now, it's like, it has a very similar pattern to how it did in April of this year. It's if it kind of goes sideways for another month, that's matches Royce's timeline, and is also quite bearish. When you can't make new higher highs for 2 to 3 months, that's normally not a good thing.
Yeah, and it'll pull itself up when construction begins.
Yep.
So I think, and then in your line of thinking, Daniel, I think that next year construction, so cement, steel, natural gas, fiber optics. You guys see any themes going on here? Those are all going to be the plays that are going to be dominating the next year's market. And unfortunately, that also means the flip side of that is that we might see technology stall just a little bit because those other guys are going to take the forefront, allowing them to have their pullback, which will, by the end of the year, allow them to take right back off. Nothing goes straight up. You have to cool off, and then everything runs in cycles. So I'm expecting first part of the year, construction leading the way. Second part of the year, technology coming back with a vengeance.
So you think it only rotates for the first 6 months?
Roughly. And that 6 months, in my opinion, won't start until about mid-February to March.
Infrastructure.
So that means all tech stocks probably around March. It's not going to be a good day to be around there.
Right. So if at its lowest point, I want to ask this question. Then. Actually, Daniel or Josh, throw yours in real quick.
At its lowest point. You heard that?
Hold on, no. I want you. This is relevant because everybody said everything's going to get pushed to 26 to go down now. But go ahead, Josh. What you got?
Well, I did want to point out that last year I said that we're going to have some wild swings, about 10 to 15%, and that we were going to trade mostly flat throughout the year. Might get like finish the year at like 5 to 10%. Just want to point out how really accurate that was. And
Of course you do.
And also, I think my pick last year was like small form factor nuclear, and boy was I right. So,
and you hear a toot? Is there a toot? Did I hear a toot? I heard a toot. So there's a horn, a toot. What?
I'm digging.
It's about to explode.
I'm digging like robo taxis and precious metals to continue, but not like gold and silver, but some of the underutilized ones that are.
You a big palladium guy? Like what are we working with here?
Palladium is actually potential for palladium, but there's some lithium, uranium, that kind of thing. Okay. And those are my pick. And I don't think we're going to get as many. Well, I mean, I don't think the swings we're going to get like another 10 to 15. If we do, I think things get really bad. But I do think we're going to, we're in for another year of volatility.
All right, I'll throw mine in. I do think we are going to actually finally get the washout of about 15%. And I do think that's going to happen first part of the year. And then here we come to save the day. The new Fed president, which is the brother of Trump, basically, is going to come in and do what he has to do to make Trump happy. And that's basically what he'll do. So I think first half, rough stuff, maybe some VIX plays, UVIXy maybe, have fun, quick wins. And then as we get towards the second half, it's all make everybody happy with votes, etc. Because by then, if he's still in office, all Trump will have is his buddies around him in every single way. And all the buddies that came from the SEC or the banks, it's all his people. So the cronyism is going to go crazy, and we will go back up and to the right. I think, let's say from July on. All right, Royce, yes. Final words on the year at a glance, 2026. What's it going to look like? Wrap it up.
So I'm going to say this. What happened if they got rid of the Fed?
Right.
What would happen to money if they got rid of the Fed? Think about that for a minute.
Like once we switch over to stable coins and
no. Okay, nope. What's the job of the Fed?
Employment
unemployment and inflation, or employment and inflation.
Right.
The interest rate, right? More or less, the interest rate. They say it goes up. This is how much we're going to let you borrow our money for. This is how much we're going to let you not borrow our money for, right? So with all the shifting in money and power, I think it's going to be a little bit choppy. I want to see what the new Fed person comes in and basically how they rein in that power if we're going decentralized, because the interest rate is not going to be necessarily controlled by just the dollar anymore. You have other outside factors being regular supply and demand curves in the cryptocurrency market, gas fees, all the other things that no one knows how to deal with. And currently we're with an inflationary currency. Since 1913, the dollar has lost about 97% of its value. What happens when you switch to a decentralized, deflationary alternative? There are only so many Bitcoin. There are only so many XRP. There are only so many. And basically it shifts the thinking, or will shift thinking once it's out there. It's like, hey, my dollar will buy more if I just keep holding on it. So the people just like to buy and hold, those people will actually win, and the people who actually spend more will have less, because to get it back, guess what? You have to hold on to it. You don't have to spend it. So that means if you let it go, good luck getting the exact same thing that you had just a few months ago. So year in review, make sure you hold on to your money, because you might need it.
I think a lot of big wigs are holding on to a lot of money right now, ready for when real estate goes nuts. And I think that's going to happen. But I appreciate that. Anybody else got anything else? Because if not, we're going to wrap up 2025, and Royce is going to usher us out with a little DJ music, a little Christmas DJ music.
Dance party.
There it is. Everybody dance. Come on. Everybody dance now. Wait a minute. Is that Middle Eastern?
They picked it.
I was going to say, what is this?
It's a Middle Eastern Christmas.
It is.
I was going to say, I think we picked.
Is that Jewish? Yeah.
I'm gonna do the Russian dance.
Hanukkah button.
How ironic if that's Jewish music. But this is da 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 da. Da. All right.
Hey,
Did you get the right button?
I don't know. Shots?
Yeah.
There we go. Now, 3 of us can do shots because Josh is actually with us finally. And sorry, Daniel, you can do your virtual shot with
It's
you and your
7:20
one
That's
one
right. You're
only
a day
fan.
drinker now, brother. You're
Yeah.
a day drinker.
Not even morning.
Do your sake over there.
With my Korean Aussie
Your
lemonade.
Korean, yes.
Monster. Mm.
That's right. I'm friends
Korean
with a
monster.
monster. All right.
Okay.
Let's get out of here before we get too nuts.
Yeah, I think we're gonna get canceled this year.
We had 2 weeks left. 2 weeks left to get
By the
canceled.
way, who won?
Actually, that Daniel
What was the
won
stock?
by not being here. Daniel won.
Yeah.
Oh,
Hey.
hell yeah.
Hey, does that mean he tied you?
Yes.
Oh,
Yeah.
that's
You know what? I
embarrassing.
like that. I like that.
And I don't think Daniel has a stock ready because we got 3 weeks. It'd be a 3-week time frame that we'd have to look at in channels. So
Hey,
I guess we can just
aim big, brother. Aim big.
We'll pick it up when we come back next. I'll
Right.
come back
We'll
with,
start
like the highest
2026.
stock I can find.
That's right. By the way, if you forgot, it was
ARB 2026. ARB.
it was Verizon,
Sorry,
by the way.
ARB.
IPO ARB. Hey.
Hey.
All I have to say is that if my actual stocks that I traded reflected how I did in our after the bell bets, I'd be doing way better. like thank God when I have real money, I do way better.
Yeah.
Because
It's a
if
little
not,
more tense.
I shouldn't
You
work.
can, yeah. I'm running the country. I'm running the company off the.
Not
off
yet,
our
Royce,
bets, by
not
the
yet.
way.
Yeah. Okay.
If Josh wasn't here, we'd all be out of a job. I bet every way he bets, I'm going. You know what? Let me reconsider that.
Uh-huh.
I'm not
All
good
right,
at
guys.
the short time frame.
Still waiting on my cut.
Hey, your bank is the holdup.
What?
Josh,
No comment.
give
Never
me,
mind. Yeah.
Josh,
Yeah,
give me the
yeah,
names you're looking at for next year, and I'll give you 20% of them.
Okay. I'll DM you some.
Fair. All right. See you guys next year.
Bye.
Yes.
See ya.